Welcome to our discussion on the Direxion Daily Semiconductor Bear 3X Shares ETF, also known as SOXS. This ETF is designed for investors who are looking to profit from declines in the semiconductor industry. It is a high-risk, high-reward investment option that utilizes leverage to amplify returns. What is the Direxion Daily Semiconductor Bear 3X Shares ETF, SOXS? SOXS is an exchange-traded fund that tracks the performance of the PHLX Semiconductor Sector Index, which measures the performance of companies involved in the design, manufacture, and distribution of semiconductor products. SOXS is designed to provide investors with 3 times the inverse performance of the underlying index on a daily basis. In other words, if the PHLX Semiconductor Sector Index declines by 1% in a given day, SOXS is expected to increase by 3%. Why invest in the Direxion Daily Semiconductor Bear 3X Shares ETF? There are several reasons why investors might consider investing in SOXS. First, it allows investors to profit from declines in the semiconductor industry. This can be particularly useful for investors who believe that the semiconductor industry is overvalued or that the demand for semiconductor products is likely to decline in the future. Second, SOXS offers the potential for significant returns in a relatively short period of time. Because it is a leveraged ETF, it amplifies the performance of the underlying index by 3 times. This means that even small declines in the semiconductor industry can lead to substantial returns for SOXS investors. Finally, SOXS provides investors with a convenient way to gain exposure to the semiconductor industry without having to research and select individual stocks. The ETF is diversified across a broad range of semiconductor companies, which can help to reduce risk and improve the overall stability of the portfolio. Risks of investing in the Direxion Daily Semiconductor Bear 3X Shares ETF. Like all investments, SOXS carries certain risks that investors should be aware of. First and foremost, it is a high-risk, high-reward investment option. Leveraged ETFs like SOXS are not suitable for all investors and should only be considered by those who are willing and able to tolerate the risks associated with leveraged investing. Second, the performance of SOXS is highly dependent on the underlying index, which is made up of semiconductor companies. This means that the fund is subject to the same risks as any other investment in the semiconductor industry, including market risk, industry risk, and company-specific risk. Finally, SOXS is a daily reset ETF, which means that it is reset to its target exposure on a daily basis. This can lead to volatility and tracking error, which can affect the performance of the fund. Investors should be aware of these risks and carefully consider whether SOXS is an appropriate investment for their portfolio. The Direxion Daily Semiconductor Bear 3X Shares ETF is a high-risk, high-reward investment option that allows investors to profit from declines in the semiconductor industry. It is a leveraged ETF that amplifies the performance of the underlying index by 3 times, providing the potential for significant returns in a relatively short period of time. However, it is important for investors to carefully consider the risks associated with SOXS and to determine whether it is an appropriate investment for their portfolio.